3.
Hello, this is Mark Hutchison with Red One Realty and my partner,
Chris Bankwitz with Rapid Mortgage.
Yep. We're here today to talk about when should you start the process of getting pre-approved. And Chris is the expert here, so I'm going to turn this over to him. He's going to go through that process from his perspective.
Sure. So, one thing we talk to, any Mark's clients, any of the borrowers that we're working with is, when's the right time to get pre-approved? Well, immediately, I would say, to be honest. I mean, if you're looking to purchase this summer, you have 4 months to get ready. So you might as well talk to your lender now. So if there is anything we need to work on, if there are any issues with credit, with income, with, down payment, assets, things like that, you have 3, 4, 5 months to kind of get those, get everything lined up, get everything ready to go. So 6 months to a year, I actually suggest people that at least 6 months, just so that you have everything ready to go, all that information up front, and that you're, ready to, pull the trigger, so to speak, in this crazy market when you are looking to purchase. Because if you, have a lease coming up at the end of June and you start the pre-approval process June 1st, well, you put yourself and your agent in a really, really tough position. So the more time, the better, just to get prepared and kind of know exactly what you're looking for in your parameters ahead of time.
Chris, that's perfect. That's what, when my clients ask me, what's our process and when should we get pre-approval, I always tell them, I said, well, in my perfect world, you get pre-approved and then we get through that process and then I start sending you listings so you can see what's out there. Not that we're going to go look at them yet, but you can just know what's in the market. And you look at the pictures, and then the next step would be we start going look at homes, not necessarily to buy, but just so you can actually physically see what the homes are like. Because sometimes the pictures on the MLS and the actual house is like a mansion versus a money pit.
Right.
So we go through that process, and then once we narrow it down, we've got to see some houses in reality, then we can narrow down the search, then we can get serious. So what you fit right into my perfect world, not that it happens all the time, but to start that process and you have a game plan in mind. Which brings up the next question is, because we always talk about with our clients, okay, you work with them to get their credit score up, to get the interest rate low. So then, the interest rate, if they go up, they go down, the market changes, property values increase. What's the time period for considering to refinance for either a lower score or to pull equity out of the property?
Sure. So, typically it's worth looking at after you've made, your first 6 payments. I'd say like every 6 to 12 months, just to kind of take talk to your lender, reach out to them just to kind of reassess where you are, to even talk to your agent to kind of get an idea, hey, I might have purchased this house 6 months ago for, $200,000, and now based off the market, it's worth $240,000 or $220,000, and maybe I have all of a sudden have enough equity built up where I can lower my, drop off my mortgage insurance, lower my monthly payment. Maybe we purchased where rates were a little higher and rates have dropped based off the market. So I would say at least every 6 months, at least, reach out to your lender just to kind of reassess where you are. Reach out to your agent to kind of get an idea of where my house is or condo is based off where the market's at. Just to kind of so you're ahead of the game and kind of have that information at hand, so that if something does happen where like beginning of last year where rates all of a sudden dropped into the low 2s, right when kind of everything happened there at the end of February, beginning of March. The people that were prepared were able to kind of capitalize on that and get the lowest payments and drop off their mortgage insurance and save themselves X amount of dollars per month because of that relationship with their lender and kind of reaching out immediately and having that that kind of team communication. Because again, when we work with your clients, it's more of a team effort. It's
right.
Mark's here on the real estate side, we're here on the finance side to make sure that everything fits your house needs and your financial needs.
In today's environment with the virus and everything, and people being concerned about going out and meeting people and wearing a mask and everything, is this something you do over the phone? Is this something you do a Zoom meeting? or a live chat, whatever it's called. What's there's so many different options out there. How do you have because that way some people don't want to come in,
Right.
or they don't want to drive.
Sure.
And if they can do a Zoom, do you prefer, is a Zoom the number one thing now, or what's the best way?
Yeah, so it's honestly whatever fits the client's needs. So if we want to do, if they want to come in, we're still, we are socially distanced. We're still following all the procedures here for our in-office meetings. If they prefer to, do a conference call, or if we want to do a Zoom meeting or a, Google meeting. So we do have access to a lot of different platforms, basically. But whatever they feel comfortable with, however they want to set up the time to chat, we're very flexible.
Okay. All right. Anything else?
It's good.
Chris, I appreciate. Oh, you want to give them your telephone number so they can call you?
Sure. Yeah. So, anyone out there even considering refinancing or kind of just want to look at some options, no pressure. Feel free to reach out to me, 614-845-5212.
All right. Thanks, sir.
Thanks.